Of course, he's also the president at FICCI now, is joining us in the discussion here. Rashesh, good afternoon, and thank you very much for your time. Let's start by understanding how you are reading the signs, how are you analyzing the state of affairs in the financial sector as a whole, especially PSU banks. I mean, today they might be rebounding a little bit, but overall the space has made investors at large quite worried. Are you fearing that there are chances of more skeletons coming out of the cupboard, just like PNB, similar issues? There is risk of that. Let's start by getting your thoughts there.
No, I think we should see this in the larger context. There have been periodic bouts of, NPAs and frauds in the Indian banking industry. I've always been more positive because I've seen that after every scam or after every such breakdown of systems, the system has become stronger. I mean, we have lived through the Harsha Mehta days and the Ketan Parekh days also. So I think the idea is to make sure that this fraud, which is a very expensive one and a costly one, and obviously everything should be done to recover money and to enforce the law and bring the guilty to charge, all of that has to be done. But along with that, there are two other things we should do. We should not create a culture of fear psychosis and complete paralysis, because then the unintended cost of that for the economy will become too high. It will be higher than the money that might be lost in the scam. So we should use this to learn, to strengthen the system and make the entire banking system much stronger. So I think, as they say in in English, that never let a crisis go to waste. We should never allow a breakdown like this to go to waste. We should learn and strengthen the system from it, but also become better and make sure that the credit-worthy borrowers get credit at the right time, at the right price, and of the amount that they need.
Mr. Shah, always a pleasure chatting with you. Do you see credit growth getting impacted in these cases? Banks will get scared in taking new loan applications, which would, of course, lead to delays.
I don't think so. I think it will make the risk underwriting much stronger, which had anyway happened with NPA. So we should keep in mind that a lot of the bank strengthening of the systems, the bank asking for more equity in a project, all that has already started with this entire NPA issue that has been there in the banking system for the last few years. So I don't think this kind of a fraud will make it any more stringent, because banks already had to become stringent. I think it's also good. The banks demanding more equity or banks being more stringent in underwriting was anyway required to avoid NPAs. I think this fraud should result in more stronger supervisory systems, more stronger audit systems, better governance and more accountability and responsibility. So I don't think we should be afraid that this will slow down, because NPAs anyway is going to make everybody more stringent, which is a good thing, because we don't want to have credit growth by just giving and distributing credit. Credit should be delivered to the right borrowers who can create value out of it and repay the loans at the end of the day.
Right, Mr. Shah. There is also, opinion in the market, particularly from the foreign brokerage side, that a lot of large private sector banks, some of the corporate banks, will actually start getting benefited because of what's happening in the financial space. There would be loss of business at PSUs. PSUs were just on the cusp of revival of their own credit growth because they were well capitalized now. But now that would all get delayed, and this incremental business would actually flow back to private sector corporate banks and to their benefit. Would you agree with that?
I don't think the issue is as much public sector versus private sector. I think we should be careful on not painting everybody with the same brush. There are private sector companies which are also grappling with NPA issues and risk issues. There are public sector banks which are also doing very well. Like State Bank is growing its retail book very strongly and very well, and it's a very outstanding kind of business that they have in the retail credit business. So I think it is about people who are good at risk management and cost management, and people who are not good at risk management, cost management. Even the conference we have today on digital finance is all about risk management, cost management, understanding customer better, innovating better. And I think these are going to be the tenets of what will make financial services companies stronger. Whether you are public sector or private sector is not going to be as important as are you adaptable, are you innovative, do you have strong cost and risk management systems, and those will be the key success factors as we go forward.
Mr. Shah, impact of rising yields on the NBFC sector, that's one big fear. Fears that business model will get impacted, including yours. Are they justified or, according to you, can they be passed on?
I think what we have seen over the years is when yields are going up gradually, usually more than half or 50-60% of the increased cost of funding gets passed on to your customers, because a lot of us, like most of the housing loans are floating rate loans. A lot of our borrowers also in the floating rate kind of structures. So if there is a gradual increase in interest rate like what we have seen, about 100 basis point increase that has happened, we have seen that out of 100 basis point about 50-60 gets transmitted to on your asset side automatically. So there is a natural hedge, because at the end of the day any financial services company is also an intermediary. You're borrowing on one side and you are giving credit on the other side. So half of this gets automatically passed on. The other half you have to absorb through better efficiency, you have to absorb through interest rate hedging and all, which all of us are also supposed to do. So I don't think the good quality NBFCs will get impacted a lot if there is, say, 100 basis point rise over a year or 18 months. If there is a sharp rise of, say, 200 to 300 basis point in 3 months, those kind of events usually impact the margins and the profitability a lot more. I don't think this will have a large impact except on the margin. Cost of funding or NIMs will go down by about 15 to 20 basis point for an average NBFC is what my estimate would be.
Right. Mr. Shah, let's shift our attention from the financial space and what's going on to markets, because you wear that hat as well. There's quite a sharp correction which is ongoing right now. We're already down 9% from the recent highs on the benchmark for indicative purposes. Broader markets at portfolio level are seeing beyond that 25-30%. How have you assessed the fall so far, and what's your view? How much more, in your view, how can you forecast, or can we forecast how 2018 could fare in the environment we are in for the market?
I think it's hard to say, after so many years, one of the things we all learn is don't try to forecast the market. The market has its own rhythm, the market has its own, evolution. But I think what we should keep in mind is last year the markets went up very well, but the economy was still catching up. I think only after October we have seen the economy has been improving. We are seeing that in the GDP data also. Corporate earnings for this quarter is also going to be for fairly good. So corporate earnings and economy will catch up, and it is very healthy that the markets consolidate. So markets will consolidate, earnings and economy will catch up, and that will be a good thing over this year. What would be concerning for this year would be a return of the volatility, because last year we saw markets were very low volatile environment. I would suspect that this year we will see a lot more volatility in the market, mainly because of global events like rising US interest rates, global trade wars, and all of that is going to impact our markets and create a lot of volatility. But a consolidating market with high volatility has always been good for stock pickers, for investment buying and all, and I assume that this is going to be that kind of a year.
So how confident are you on broad-based earnings revival ahead?
I think it's already underway. I think there is an economic improvement. There is a companies that we meet, a lot of our clients are seeing significant growth. They are still not seeing pricing power, but after GST actually their profits have also improved because they've been able to cut prices and still improve profitability. So I think GST is going to have a big impact for the listed companies, for the more organized companies, and I think that is, I would think, one of the drivers of better earnings also, along with the fact that economic environment is improving, GDP growth is improving. We have already absorbed the disruption cost of demonetization for GST. All that is already behind us, and given that they've created a low base effect, I would expect the next few quarters corporate earnings to be on a rebound, and the recovery will be fairly robust.
Rashesh, one last question before we let you go on SMEs. Edelweiss has also progressed quite a lot and forayed into that space. How are you analyzing it?
I think SME has been one of the ignored opportunities in India over the years because of lack of technology or high cost of reaching out to SMEs or not having enough information about them had made SMEs not a very favored opportunity from a credit point of view. But we started this business about 8 years ago and we have had a great experience, and we think there are a lot of good credit worthy borrowers in the SME sector who are great entrepreneurs, who are great business builders, but were starved of credit. And what we have seen, a lot of these companies have gone through GST, have gone through demonetization, and have actually become stronger. And a lot of this category of SMEs are now scaling up well. They've become stronger after this, the entire change from unorganized to organized. And now there'll be a lot more information about SMEs which will be available. So I think this entire digitization, the entire data availability, all this is going to make it a lot better for good credit worthy SME borrowers, and there are lots of them who will now get access to formal credit. A lot of these SMEs were also accessing informal credit earlier, which was more expensive, and they were not able to get the tax credit on that. So when I talk to a lot of SMEs, they find that this access to formal credit for them is actually better, because they are able to create their income tax returns and profit and loss accounts. But along with that, from a after tax cost point of view, this is cheaper form of credit for them, and we are able to provide this credit to them because with better availability information, better technology, our costs have also come down.